Hey traders, what's going on? Welcome back to another video. This video is going to be really quick. This is made to go with the previous video, the 2.0. So I'm just going to go through, give a quick little example. Like, I just want to make this really quick videos. So I'm going to start off by explaining like our approach to the market in this case here. Go write down the things that we need to apply, just like the previous one, and all those things are below as well. And then finally, we're just gonna go look at one or two examples so we can see how we are actually applying this to the charts and everything like that. So first off, this is meant to be just another version to the video above, the first video there, the 2.0, where we went through and we drew our market structure, always placing our supports inside of the higher time frame supports so we can find a very key, so we can find a key zone that we want to trade from. And so this is the same case here. We're on the weekly time frame. This is Euro NZD. The pair doesn't really matter in this case, but here we are on the weekly time frame. So if we're just gonna check out like what happened last week, we're already getting downtrend market structure here, and the only thing that's green and bullish about this setup here is not last week's candle, but the week prior. But that week just went and retested the previous resistance, old support, new resistance. Let me just move this line over here to the green one, and then move the next one to the red one, so we can identify the start and the end of these 2 weeks. Okay, so the way I'm performing my analysis is pretty much the same as the video above, but one time frame will be different. So in this case, is the weekly to get our major structure zone, and I'm taking the trades from week by week. I'm taking the trades from week by week so I can get a new analysis from week to week, or if I'm doing day trading, I want to update my charts day by day. But in this case, I'm more so doing it week by week. And then from just getting let me just draw it in actually here. Oh my bad. Let's go like remove drawings, and then we're gonna identify these 2 weeks like this. Then we're just gonna use the orange line so we can draw our weekly supports, our weekly support and resistance areas. So we have this wick here, right, which goes across, doesn't break through the body. Doesn't close below the wick, so we can still use this as a valid zone, just like this. And then we also have another zone here where we could still get a potential retest of this area before new lower lows start to form. But given by the structure and everything that we're getting currently, this is all that's there. And then take profit areas is going to be the support down below, right? That's the next area prices go to. The 4-hour time frame, we go through all that we're really looking for. If we just go to, let's say, intraday trades, but they want to take their trades from the 1 minute, because I know a lot of people are working and a lot of people are busy throughout their days, right? Here's our case. If we just go back to the start of the week, let's just have a look. Okay, so we're gonna start a little further back. We're gonna start actually, let me just try to fix the charts. So here is the start of the week where we're looking to take that downtrend structure. So this is the start of the second week here where we're looking to take the downtrend structure to the new lows. In this case here, we do get opportunities for this setup preparing itself just the week before. Maybe this is like Thursday or Friday or something like that, during these candles here on the week prior. Let me see if I can, from the week prior, ultimately, from the first vertical line that we had placed. This is still in the first vertical line, and then this here is the second vertical line. So if we just go through, and like the previous videos where I show to watch the market structure, to track the market structure, so you can be aware for any reversals that start to appear. When does market structure start to change from these areas of key interest, so we can take better trades? And in this case, we're doing it from the 1 minute time frame. Everything else is still the same way I applied it from the 15-minute time frame and the 30-minute time frame from the prior videos. This case, it's still the same. So if we can just draw these structures in. So here we're getting some higher high structures still, so we have no real reason to take a short. Yet there's no downtrend structure. We pop all the way up here. We go like this, we pop new high, and then we actually form a lower low structure right here. Okay, let me zoom in on this area, make it more clear for you guys. it's a very simple approach to the market. You know, you're just getting the market structure and everything just like that in place. So here we had our low area, right? We formed a new high, and then we formed a new market structure low like this. Let me make that horizontal. Okay, so here we have the same case. The stop loss and everything is still the same. Everything is still the same. Just the only difference in this case here is that this is the 1 minute time frame that we're looking to take our entries from. So in this case, where we get the break of structure, the new lower low forming in, lower low telling us that downtrend is here. We're getting a retest of that old support, new resistance, and we expect it to hold because we expect the downtrend to continue. We're getting the downtrend on the 1 minute time frame, and on the weekly and on the 4 hour, we are in our area of interest to take trades. We're looking for opportunities to go with the higher trend, which we've seen from the weekly time frame, which is downtrend. Okay, we're still doing downtrend formation on the weekly time frame. So in this case here, we'll wait for that red candle rejection. Let me just zoom in a little more. I believe all my candles, okay, they're green, beautiful. Okay, so as soon as we can get up to this zone, we can form a red candle rejection just like this. Our stop loss, other side of the zone completely, all of the market structure and everything, which is going to be this area here. Stop loss just above that, and then the take profit 1 to 3, just like the previous video. Let's just do it like this, 1 to 3, just like that. And if we move it over, we'll see if we get hit. Okay, so there's the case where the TP does get hit. Let's see if we get any new lows or anything like that. Okay, so we did break off into new lows. Like I mentioned in the previous video, there's 2 take profit areas. First TP 1 to 3. Second TP is the next horizontal support or resistance, next incoming one. Just like the free course, just like everything else I've always said, which is this support down here. Okay, this is the weekly support. Our stop loss, our stop loss and our take profit are based on the higher time frames, and our entry is what we want to really try to focus on and get a really good risk to reward ratio on our trades. And that's where we're going to the 1 minute to try to find better setups. So let me just go back to this real quick. Okay, so this is how this setup goes. The same thing would occur if, let's say, we didn't try to take a trade in the first week on that bullish candle up back to the resistance from the weekly time frame. Let's say we were just waiting the next week after that bullish candle to take a trade, which is identified by this vertical line here. Same thing goes. We're only tracking the structure in this major orange line, which is the weekly resistance which we drew. Okay, so here we have structure still making higher highs, and we're trying to go with the lower lows. Okay, so here we get that setup. Let me just delete this one in this case. Here we get that setup, that break and retest right here, break, retest. Stop loss would go on the other side of this zone, but ultimately we'll try to do risk 1 to gain 3. And then the stop loss is hit in this case, but we're still on the hunt for the same exact setup, which, you know, we're still just looking for lower low structure. Okay, here we get another break and retest. Stop loss, other side of the zone, and we actually do get hit out a few pips later. Let me make that 1 to 3. So there we do get hit out a few pips later, but nonetheless, we're still looking for the same exact setup always, and just always, until we have broken out of this range and have actually been on top of this major support and resistance area. It's always going to be downtrend structure trades that we're looking for. So here we have the same setup once again. let's just move this line. Here we have our new low area, which we want to break, and a retest of this to take a trade. Looks like we get a retest here. And then our stop loss is on the other side of the whole structure, which is going to be where our last stop loss was taken out at. And our stop loss is just above, so about 26 pips, call it. Risk 1 to gain 3. Something like that. And we move it across. Okay, so this is the example that I wanted to talk about. This has to go back into a lot of the psychological fears and everything like that, because if we're trading on this time frame and you choose to watch this, which I don't recommend, if you just choose to watch this and, you know, as price goes against you, as it goes for you, your emotions are just going to be in a whole mess. Okay, so this is the case where we start forming higher high structure. You know, we almost hit our take profit, then higher high structure came in. We got very close to our stop loss, right? But we need to just hold on to our position, okay? First TP is 1 to 3, about 80 pips. We just need to hold on to our position and just let our stop loss get hit. In these cases, we are getting better risk to reward ratios. And then I'll go to the 4-hour time frame so we can see what would have been our trade setup if we were to just take this trade from our trade from the higher time frame. Same thing goes, we would just be trading that red candle rejection, which is just something like this. And if we try to get that 1 to 3, stop loss is going to be on the other side of the setup, which is part of this red candle, stop loss up there. And then we would try to do risk 1 to gain 3. So in this case, we would still just be active in this trade. And so the 1 minute time frame let us get a better risk to reward ratio and let us get out of our trade a lot sooner, so we don't have to hold the trade. And nonetheless, you got to still remember that TP2 is the major support down below. That is still the target in this case. Okay, only until the weekly time frame has actually changed structure and is starting to go against old things, then we know that the trend is changing, and we will also change to that. We'll accept whatever losses we've taken for this time period, and then we'll just be trying to trade with the trend for the next time period. So that's all I really want to say for this video, guys. I hope it was short. I hope it was concise. I just want to try to get to the point and just leave you guys with that. Thank you for tuning in.